In this tutorial video, we will show you how to submit an offer on behalf of a client here in New York City. If you're watching this video, you're likely a licensed real estate salesperson, a licensed associate real estate broker, or possibly even a principal broker. Needless to say, if you have been a real estate agent in the city for a while, you probably know how to do all of this. However, we are happy to show you this primarily as a refresher. We also have a couple of slight tips and tricks which we use when submitting offers, which you might find to be helpful. So we are looking here at a draft email that I've already prepared, and it is basically our standard offer submission language for a client. The particular listing we will be submitting an offer on today is actually one of our own firm's listings. It's actually already in contract, so it goes without saying that this exercise is purely for illustrative purposes only. The client name is fictitious, the listing is our own listing, so we're not actually submitting a real offer during this video. That being said, we can start off by going back into the offer email, and we'll go over quickly the things that we have here in this language. So the first thing you want to do with an offer is you want to clearly identify the names of your buyers. Second of all, you also want to identify the apartment or townhouse property, whatever it is, for which you're submitting an offer. You'll see as well that we do have that same address, the subject property, in the subject line of the email as well. So once you've identified the names of your buyers and the name of the property that you're going to submit an offer on, you also want to make sure that you address the offer email to the names of the listing agents. Now, customarily, the listing agents will be on whatever platform you're looking at the listing. So you could be looking at it on StreetEasy, then you would see it down here. If you're logged into your agent account, you could be on the New York Times, you could be in RLS using a vendor such as RealTMX or Nestio or OLR, or you could be using your own brokerage house's software, and it should indicate the names of the listing agents. As far as the emails of the listing agents are concerned, oftentimes you'll want to just Google their names to get their emails. So in this case, again, we're just going to put in our own firm's email because this is a test, but you'll want to make sure that if there are multiple listing agents, that you will be sending the email to multiple listing agents. And it is also a good idea to copy your principal broker if that is something that your team does. If it's a team client as well, very important to make sure that everybody is copied on the offer. So in this case, the name of the listing agent is technically Nicholas, so we'll put that there. And we can move forward. So in terms of the offer details themselves, the first and most important element is the offer price. Now, presumably, if you're at the stage, you've already possibly done comps for your buyer, you've talked about strategy, and you've already come up with a number. In this case, the asking price is $949. So let's just go ahead and say that the offer is for $925,000. The next thing we need to do is specify the percentage down for the offer. In this case, we're going to assume that the percentage down is 25%, although I believe this building is okay with 20% down as well. So to calculate percentage down, we would just open up Excel. We're going to type in our offer amount, and we would do 25% times our offer price. So our down payment would be $231,000 and $231,250. 231, 250, 25%. Now, in most cases, your buyer will likely have a mortgage contingency. Again, this is something you've likely discussed with them prior to this stage. If the buyer is purchasing all cash or if they're highly qualified, you may be able to put contingencies none here in this field, but it is important that you talk about the risks and benefits of such a strategy with your client. And it's also important prior to submitting an offer to reach out to the listing agent and try to figure out what competition, if any, you may be facing. Now, it certainly makes sense in a competitive bidding environment to minimize or completely remove your contingencies from an offer. if your buyer is motivated and wants to win the property. But if the listing has been on the market for quite a while, your buyer is thinking about financing, not necessarily wedded to the idea, you may not necessarily need to give up your contingencies in the offer. So definitely something worth thinking about before you actually submit the offer. Now, as far as a closing date is concerned, this is something whereby if your buyer is flexible, doesn't really have any particular timeline, in theory you could put ASAP, or you could really just come up with a date that is appropriate based on the property type. So if it's a condominium, your typical closing takes about 2 months. If it is a co-op, takes a little longer, could take from 2 to 3 months. So again, you could either just put ASAP here, or you could put a particular closing date. Alternatively, you could just write flexible, and that may be very interesting to a seller who has a particular objective when it comes to their move-out timeline and whatnot. Now, as far as property condition is, this is a line item that is optional, right? So in New York City, it is not terribly common for a buyer of a condominium or co-op apartment to respect a pre-contract signing inspection. And that's primarily because with an apartment building, you have a board of managers and you have management, and in theory, they are taking care of the building, handling the common elements, the boiler, the roof. They're taking care of those things, cleaning the lobby. So in theory, the only thing that an inspection could really achieve for a buyer is to look within the walls of a particular unit. And unless your property is, an estate sale, or maybe the highest floor unit with a roof deck and possibly may have roof issues, there's not necessarily really anything that an inspector could find in an apartment that's in okay condition compared to what your broker or the individual buyer could spot with their naked eye. So it is up to the buyer. You should definitely explain to them the risks and benefits of an inspection. The most important thing, though, is that you are transparent with the listing agent. So it would come as a huge surprise to a listing agent if you submit an offer and you don't mention an inspection, and then all of a sudden you ask the listing agent for an inspection. That's a big no-no. So you just want to be transparent with whatever decision your buyer has made with respect to the actual terms you submit in the offer. Now, looking ahead, the next line here is primarily catered towards submitting an offer on a co-op, and that's because we are attempting at least to highlight the financials of the buyer, and we're basically alluding to their qualifications for co-op board approval. Now, the way we would figure out all of this information is really by looking at the offer documentation we've presumably already asked the client for, and we probably already have available. So we're going to open up here the actual documents, the offer docs, and we'll take a look at those real quick. So here we have the offer documentation for the client. As is the case with any co-op apartment, you really will need to be submitting a REBNY financial statement. This helps a seller and a listing agent determine, financially speaking, whether or not a buyer-client is qualified to purchase a property. So if we're looking here at the financial statement, we have assets in this box, we have liabilities here, and then we have monthly income and monthly expenses here. So these are the four most important boxes. There are some other boxes down here: general information, contingent liabilities. There is also a second page which asks for itemized information, but for the purposes of this exercise, we're really going to only focus on basically the top half of this first page. So if we look at assets, we see combined assets here for both the fictitious applicant and co-applicant of about $419,000. Now, there do not appear to be any liabilities, so therefore the combined net worth is $419,000. So if we go back to our actual offer documents or offer email, we can go ahead and put in $419,000 in terms of the net worth. Now, as far as the annual income is concerned, if we go back to the REBNY, it will be down here in the sources of income box. So the total monthly income would be $15,383 plus $11,000. So if we go into Excel, we can put those into two cells, and then what we would do is we would sum these two and multiply by 12. So the annual income is about $316K. So if we go back into the offer documents, or email rather, we can put in 316K for the annual income. Now the debt to income ratio, again, is very important for a co-op. The way we would calculate that is actually by going into a payment calculator. You can use it on really any website out there, and we want to calculate the monthly expenses for this purchase, specifically the mortgage, principal and interest, as well as the co-op monthly maintenance payment. And once we have that, we actually want to go ahead and add that into the REBNY financial statement. So once we do have the projected expenses, we would actually add them into this section, and we'd update the combined total as well as the maintenance and apartment financing cells. So right here, these top 4 cells. So going back into the actual listing, here on StreetEasy, actually, they have an estimated payment calculator. So if you want, you can go ahead and use this. Click on that payment number, and a box should pop up if we're lucky. Let's see if it works. Oops. Let's see, it doesn't seem to be working. Let's try one more time. There we go. Okay, so it's just gonna reload, and then we can give it another shot. So click on this number, and basically here we would want to take our offer price, $925, put that in the calculator, and then our down payment, we certainly need to update that. So our percentage down is 25%, so $231,250. So if we update this to $231,250, it should give us a mortgage amount and a maintenance number as well. So the total is $4741. Now, basically what we're going to do at this point is we're going to take these numbers and we're going to divide them by 2. So once we've divided the expenses carrying costs by 2, we're going to take these numbers and we're actually going to put them into the financial statement. Now, if you are using a Mac, there's a very easy way to do this, and you would open up Preview. Now, once you open up Preview, you would click on this button here on the right, and then you'd be able to actually drag a text box into the document. So you can see we've done that here. If we go back to the expenses, it's $1,678 for the apartment financing. So we would put in $1,678 right here, copy and paste that, and we put the same number for the co-applicant. If we go back to the maintenance, it's $692.50. So I'm going to copy this field, update it, and then we're going to copy that again. We're going to paste that here. Now, there's some other sort of projected expenses here of $125. It's unclear what that is, because usually projected expenses are for fixed recurring liabilities, such as a car payment or student loans. However, if we go into the liabilities section for this particular buyer, there are no liabilities listed. Therefore, it may be appropriate for us to actually remove these items for this particular example. Now, we're unable to edit this document for whatever reason, but there is a workaround. So if you go on the left here and you click on this box, you can see it'll give you a white box. Now, ideally what you do is you would make this box just the right size to cover that old number, and then we would make another box. I just copy and pasted it, and we would go ahead and cover that. So what we need to do now is we need to update the total columns. So if we go back to Excel, the total for each applicant is 2370.5. So we would get another text box here, and we would put 2370.50. We would copy that, paste it, put it here as well. And then finally, we would just come up with the combined total, which would be this column, 4741. So the combined expenses for the applicants are $4,741. Now at this point, we are going to save this document. Now, would like to just quickly summarize what we're looking at again here. So this is actually a compiled PDF document with all of the requisite offer documentation for our buyer. It is much more efficient and will also make your offer more attractive to a listing agent if instead of submitting individual documents in a confusing email, you put everything into one PDF and then you thoughtfully rename it, such as with the name of the buyer, you label it as offer documentation, and you put the name of your firm. That way, when the listing agent opens the offer, there's one document, it has everything they need, and therefore you minimize the risk of them being confused or not perceiving the offer to be as competitive as it could be otherwise if it was laid out in a more presentable manner. So if we go back into the offer email, we now need to actually calculate the DTI. So if we look at the sources of income, again, we have $26,383 a month. We've already calculated the annual income, which is right here. So for us to come up with the DTI, we would actually really only want to look at the monthly income. The monthly income, again, is $15,383. So if we put here income, $15,300.83, and we put expenses, and the expenses, remember, are just going to be the monthly co-op mortgage and maintenance payment, which we have up here. So the debt to income ratio is your monthly housing expenses plus other fixed debt payments over the income. In this case, it looks like it's 30.98%. So in theory, we would just put here 30.98%. But it would also be helpful for us to mention that that's actually a fairly high number for a traditional co-op. Most co-ops are really going to want something below 30%. In some cases, they may even want 25% or below. So if your buyer is above 30%, it's very important that before even submitting the offer, you contact the listing agent and you figure out if there's any specific guidelines for DTI, debt to income, or post-closing liquidity for this particular building. Now, on the note of post-closing liquidity, this is the final thing for us to discuss with regard to co-op qualifications. Most buildings require that the buyer, the applicant, has at least 1 to 2 years of post-closing liquidity in liquid assets after factoring in their down payment and their closing costs. Now, post-closing liquidity is defined as this monthly expenses, housing expenses, plus other fixed debt. Now, in terms of this buyer, if we go back to the revenue statement, we're going to see that they have about, looks like 200. So if we add the cash, money market, and the stocks and bonds, which are all considered to be liquid assets, they have 236 up here plus 26. So they have about 262 and change in terms of liquid assets. Now they are actually, as per our offer email, they're putting down 230,000 more or less. So they really only have $31,000 left in liquid assets after closing. And that's not even including closing costs. So if we take the 31,000 if we take the 31,000, divide that by the expenses, they have only about 6.5 months of post-closing liquidity. So that's actually a huge red flag. If this were a real scenario, we would not be submitting this offer. And the reason is that most co-ops really would not feel comfortable with that. Now you might be asking, aren't there other assets in the statement? And the answer is yes. There's personal property and furniture, and there's a 401k balance. Now realistically, furniture counts for nothing. Property, physical assets don't count for a thing when it comes to post-closing. Now some co-ops may allow you to count some or all of the 401k. So before submitting this offer, we would reach out to the listing agent and ask her or him to confirm whether or not the building allows 401k for the purposes of post-closing. We'd also ask what specific requirements, if any, the building is looking for. But as a base case, even if the building doesn't have requirements, we would really discourage our buyer from submitting an offer here unless they had at least 12 months of assets, post-closing liquid assets. That being said, the other option here would be to ask the buyer if they're able to receive a gift from a family member. Now we'd have to confirm with the co-op that they permit gifting, but assuming they do, and assuming they have a family member who would be interested in giving them, say, 50K, that would be very helpful. So if they were to receive the gift, right, we would obviously increase the cash balance by 50K. We would also then need to include a gift letter in this offer documentation packet. So going back to the offer here, Let's just assume that we've received a gift. Let's assume we've done the calculations, and let's assume that the buyer now has 24 months of post-closing liquidity. At this point, we would be pretty much close to done with the offer itself. This sentence here really just alludes to the fact that we've submitted complete offer documentation. Now that includes the revenue statements as discussed, as well as a copy of a pre-qual or a pre-approval. And finally, it is helpful to include some sort of proof of funds. Now, this is an illustrative example only, but it is helpful in general for the proof of funds to be at least 10% of the offer price. And that's because when you sign a contract, the buyer needs to put down 10%. So if the listing agent sees that the buyer has 10% in liquid assets, the listing agent doesn't have to worry about the possibility of the buyer needing to liquidate some account or going through some complicated maneuver to get the money, which might not have certainty of outcome. So in other words, if our offer is $925, in theory, we should be submitting proof of funds for at least $93K. Ideally a little more to account for the fact that buyer closing costs for a co-op are probably 1 to 2%. So finally, it is also a good idea, if possible, to include attorney contact information in an offer. And the reason for this is that having the attorney contact information, it gives the sense to sellers and listing agents that your buyer is serious, your buyer understands the next steps, and your buyer is ready to move forward expeditiously towards a signed contract. So would certainly encourage you, as you work with buyer clients early on in the process, to encourage them to think about reaching out to a few attorneys to figure out who they're comfortable with and to, in theory, make a decision about who they'd like to retain if and when they have an accepted offer. It is also important to note that realistically this attorney could change. So even if your buyer submits an offer, they're pretty sure they're going to hire that attorney, they could really change the attorney right when they have an accepted offer. But it is important to include it, again, because especially in a competitive listing situation, competitive offer environment, having attorney contact info may give your buyer the edge over other possibly unrepresented buyers who don't know what's going on, who aren't prepared. They might not even know they need a lawyer. In the meanwhile, your buyer comes in fully coached, knows the next steps, has already done their homework, and has an attorney selected. So at this point, before submitting the offer, we would be sure to attach that single document we talked about that has all of the offer materials. So we would just drag this into the drag drop attachment field. We click attach. And once that's attached, we're basically good to go. So would suggest just reviewing all of the language again, and then going ahead and hitting submit offer. One final step we like to take as well is we also like to send a secondary message to the listing agents through a website portal. In this case, we happen to be using StreetEasy. So what we would do here is we would write a note. We would say something like, "Hi Nick, we emailed an offer under separate cover. Can you kindly confirm receipt?" Now you'll also probably want to put your email signature. Maybe you can make this message a little more thorough, but in the interest of time, we won't do that. And then you would want to click on this send me a copy. That's really helpful because then you'll know on the record that not only did you send the offer, it's in your sent inbox, but also you have a secondary message from a third-party site confirming that you've indeed reached out to the agent, asking them to confirm receipt of the offer. So this is an optional step, but it may very well be helpful. And then you want to wait probably half a day or maximum a day for the listing agent to confirm receipt of the offer. But realistically, most listing agents understand that they need to confirm receipt of that offer immediately. The moment they check that email and they see that offer language, they need to reply and they need to say received. Now it does usually take at least a day for the listing agent to actually present it to the seller, for them to discuss and hopefully to come back with a counter or some form of response. So you may want to be patient in that regard, but certainly you should expect the listing agent to confirm receipt of the offer pretty quickly. We hope that was helpful as an overview. If you have any questions, you can leave a comment right below the video. If you want to ask anything else, feel free to email us, call us. If you are an agent in the city and you're interested in associating with our firm, please don't hesitate to reach out. We're always looking to add good, enthusiastic agents to our roster. Good luck out there.